It's Monday, and I want to welcome you back to Real Estate Investing Made Simple on the Cardone Zone. Every Monday, I come to you to talk about how you can get started in real estate, whether it's starting with 1 unit, 8 units, 32 units, my favorite, right there in the sweet spot. But look, regardless of where you are today, you want to be invested in real estate at some point. Today, I'm going to cover, because some of you have been out there hating on your boy GC and trying to tell everybody what Cardone Capital is or is not without knowing what Cardone Capital is and is not. Today what I'm going to do is I'm going to handle the big question, what is the difference between a REIT and Cardone Capital? Call in and we're going to give you one of my favorite shirts sent to me by my friend James Bodine. I apologize in advance to all the Blackstones, the Goldmans, and to everybody that I'm going to talk about today, especially the REITs. Okay, look, if you're thinking small, let's think bigger. If you're thinking big, let's go bigger than that. You know what I say? Go big or, what do we say?
Go bigger.
Go bigger. Okay, today we're going to talk about REITs versus Cardone Capital. And I'm going to take a couple of REITs that are out there right now that are well known. One is Equity Residential. I'm doing a deal with them right now, by the way. And Avalon Bay versus Cardone, okay? And then what I'm going to do is I'm going to break these up for you and I'm going to show you how these works. Remember, a REIT is an investment in a piece of paper. And I say never trade paper for paper. It just doesn't make any sense. What you want to do is you want to trade paper for assets that produce more paper. So if you're taking notes today, I want to look in your comments, what's your favorite takeaway from today's show? And we're going to compare the two. And let me just say that, look, one day I will probably be a REIT. So just keep that in mind, that one day Grant Cardone will probably take Cardone Capital and turn it into a REIT. Because when you have a piece of paper, paper provides for liquidity. If I have this piece of paper in my pocket, I can easily spend the piece of paper. The number one advantage to a REIT is for those of you who want to put an investment in today, $5,000, $10,000, $25,000. Tomorrow, you could get that $25,000 out if it was an emergency. And that is the number one reason I would not want you invested in a REIT. Because the moment you commit $25,000 to an investment and then say, yeah, but I can get my money back tomorrow, means you actually didn't make a commitment. It's like getting married with a prenup. Planning on a divorce. All right, so look, Equity Residential, $29 billion. That is 29 times bigger than me. You make your decision what's best for you. I will say this to you. You need to get invested. Fidelity today wrote an article online and said you need 10x. They're using 10x at Fidelity. Fidelity's $5.6 trillion, just to give you a size and possibility, okay? Avalon Bay, $29 billion. Fidelity is $5.6 trillion. Okay, you know what they're saying right now? You need 10x your income if you want to retire at the age of 67. So if you're making 60 grand a year, they're saying you need 600 grand. By the way, this is completely made up and not true. Depends on how much money you're spending, how you want to live your life, and how much freedom and how much security you actually want to have, and then how long you would live. Okay, Equity Residential, $29 billion. Avalon Bay, $29 billion. Grant Cardone, Cardone Capital, your boy over at Cardone Capital, $1 billion, a little more than that this week. We'll break $1.2 billion because I'm going to close on $240 million worth of deals Thursday and Friday. Congratulations to all our investors. Okay, history. The history of this stock. Remember, you're buying a stock with Equity Residential. Okay, the history on this stock this year has been $65 to $77. If I go in right now to CNBC, and I look up EQR, I think that's their symbol. EQR, Equity Residential, boom. Today, $78. So it broke $78. So if you'd invested in it the first of the year, somewhere around the first of the year, January, February, $65 became $78. If you sold it today, you'd make $13. $13, a 20% return if you sold it. Okay, Avalon Bay, You came in, you put $25,000 in, you take $25,000 if you bought in January, divide by $166, that's how many shares you would have. And if you sold today, you would have made $34, all right? 5-year return, okay, between 63 to 78%, 142, this is much better. This is the range, I'm sorry, this is not the percentage. This is the range it is traded for the last 5 years, between 63, so notice, in the 4 years before the last 12 months, this thing had not really moved much. And then all of a sudden it started moving. Here we got 142 to 208. Shares out, 370 million shares. Okay, by the way, I don't have any history. Okay, I'm like, I don't have a public history. They have a public history. Mine's private. Okay, if I showed you some of the returns on my properties, you'd be like, I expect 48% on those deals, Grant, that you do today. I probably can't produce 48%, but I have. Okay, also, I'm not under the scrutiny. They're under scrutiny, public scrutiny. I'm not under public scrutiny. I don't have those obligations like they do as a public REIT. Shares out, $370 million, 370 million shares. 139 million shares, I have 2,500 investors. So I don't know how many different investors they have. I would expect they have millions and millions of investors. You got to decide whether that's good for you or bad for you, okay? You want to be with a smaller company or you want to be with a big giant company? Dividends, they pay 2.9% dividend annually. Guess what? Avalon Bay pays 2.93%. Oh, they're not talking to each other. Okay, I pay 6%. Okay, my dividend is 6%. We have a preferred return of 6%. That is double, okay? Number two, they pay every quarter, every 3 months, because they're very, very smart. These people are so smart. Oops, Johnny, how can I get rid of that? These people are so smart. They're like, why would we pay people every month? We know we can get away with paying them every 3 months. Can you imagine if I hired Johnny, the camera guy, and said, Johnny, you're going to work every day, we're going to pay you every 3 months. Okay, that's what they get away with. Oh, by the way, all the big companies get away with this. And if I become a REIT, or maybe we should change that to when I become a REIT, I will pay people every quarter too, because that's what the market allows me to do. Right now, we pay every month. Last month, we distributed $1.3 million in cash to our investors. The month before that, $1.3 million. The month before that, $1.3 million. So you got to decide whether you want to be paid every 3 months and have somebody sit on your money. Okay, last month, I could have sat on $1.3 million for an extra 69 days, but I didn't. I distributed 89 days, but I distributed to my investors. Okay, why? Because I would benefit from $1.3 million for the first 30 days, not pay interest on it, $1.3 million for the next 30 days, not pay on it, and then $1.3 million for another 29 days before I distribute it to everybody. I would have sat on your money for 1.3 times 3, $5 million for 89 days. Okay, liquid. They are liquid. Liquid means what? $20, you gave them $20, $25,000, you can get your $25,000 back the next day with me. Okay, they're both liquid. I am not liquid. When you give me $25,000, money's gone. Gone, and gone. Okay? Now you got to decide for your family whether that's good for you or not. Okay? So for this month, I'm going to put I'm going to buy $240 million. Oops. $240 million. I'm going to put about $80 million down this week, Thursday and Friday. You're going to see me write checks. We're going to distribute on the internet. You're going to watch me write 2 checks, one for $46 million, one for $54 million. One for 46 and one for the difference, $34 million. I'm going to buy 2 deals. We're going to finance. I'm going to put $80 million down. Let me tell you, that's my money, by the way. That's not your money. That's my money. When I write that check for $80 million, I cannot. Understand this. I cannot, nor do I want to get my money back tomorrow. And even if I decide 30 days from now, 60 days from now, 3 years from now, I want my money back, I cannot get my money back. That is called illiquid. Illiquid, and I want to be illiquid. Even if I get ill, I can't get liquid. See, the problem is you guys get ill, and then you go liquid, and you lose money. Like the Bitcoin thing, okay? If you watch the way I bought Bitcoin, first of all, I didn't buy Bitcoin, okay? I took BTC, I took it on trade. I got 90 BTCs. It was worth $500. I think I got 95, okay? I got 95 of them at $500. As soon as I got it, I traded 15 BTCs. Why don't we clean these before the show? I traded 15 BTCs, immediately sold it to pay for my trip. A group hired me, gave me 95 BTCs to go do a speaking gig, I don't know, 2 years ago, okay? Immediately traded 15 BTCs at $500, paid for my gas to go over there. I got my money out of the deal. I still own 74 BTCs. All right? It went from 20,000, it went from like 5,000 or $500 all the way to 20,000, fell apart. I didn't sell any of it. I'm illiquid. To me, I don't own the BTC anymore. I don't want my money. I don't want cash back. I took cash and traded it up for something called a BTC, okay? I still own 74. It goes down to 5,000, goes down to 3,800. Everybody's freaking out, selling their stuff. I didn't sell anything. Why? Because I don't have any cost basis in the BTC. My cost basis is zero. I'm sitting on free money. I wait, boom, it hits 5,000 again, then it hits 6,500, then it hits 8,000. This weekend it hit 11,000. Okay, I will sell this BTC when it breaks 20 grand again. And might not sell it then, you understand? I'm in the money. I have no risk, I have no downside. You do not want to be illiquid if you want to create wealth. If you want to create wealth, do not be illiquid. You're seeing the rappers and the ball players buy all their fancy watches. They're buying Richards and Patek's. Guess what they do when they get in trouble? That's liquid. They go to the what's the shop? The pawn shop and say, hey, what can you give me for my Richard? I paid $335 for it. What can you give for my Patek? I paid $180 for it. What can you give me? I'll give you 50 grand right now. Okay? And they get killed because they're liquid. You don't want to be, man, I can't sell an $80 million property overnight. It just can't happen. So you got to decide, though, what's good for you. Okay, and then we'll take a phone call. Well, we're comparing REITs today. We're comparing REITs to Cardone Capital, as we say here, Cardone, okay? All right, let's talk about real property. The REIT is not backed by real property. The REIT is backed by a piece of paper that someone decided it is worth X. Today they said it's worth $142 a share. Tomorrow it could be worth $141, it could be worth $148, it could be $130. If the stock market takes a shit, by the way, what do you think happens to these stocks, even though they're in real estate? Okay, if they start dumping out of Google, Facebook, Bank of America, AIG, all the biggest stock companies in the world, the General Electrics of the world, if they bust out of Microsoft, in any of the tech companies, right? Don't you think it'll drag these down too? If there was a massive sell-off. It's in the same system. It's in the same system, okay? If there was a massive sell-off in the stock market today, it would not affect Cardone Capital. Real property, it is not backed by real property. No, yes, Cardone Capital is only backed by real property. I don't know if you can see this, if this is big enough. Yep. Access to the operator. Do you think you're going to be able to call the guy at Avalon, I want to speak to the president of Avalon Bay? Right? Never. Never going to happen. Isn't going to happen. And if you call me, probably ain't going to happen either. But it could. With me, you could actually talk to me. You want to come to the office? You'll see me here. I'm a real guy doing real deals every day. I'm the only person in the real estate space doing videos about the deals we buy. Okay, depreciation. One of the major benefits of buying real estate is depreciation. You don't get it at Avalon Bay. Johnny? Yeah. You don't get it at, what's the other company we're doing? EQR. You don't get it at EQR and you don't get it at Avalon Bay. You do get it at Cardone Capital. Okay, types of income. Okay, at Avalon Bay and Equity Residential, you will be taxed as ordinary income just like you earning a salary, okay? Over here, we give you a K1, and it is the best, lowest cost basis taxed money you will earn in your lifetime. Ryan Secco got $4,400 last month. That's called K1 income, okay? He is taxed at the lowest rates. Yeah, clean me up, Johnny. We're going to take our callers now. 305-865-8668. $4,400 went to Ryan Secco. Jared Glant, who works for me, probably got $12,000 last month. Maybe 15. I don't know. My sister got 10 or 11. My twin brother got like, I don't know, 40 grand. Jamie, our investor, Jamie, I think he picked up 40 last month. He wants to get to 400,000 a month with me. Where we distribute every month, the guy will be making $4 or $5 million a year, passive income forever, and it will be illiquid. He will take advantage of depreciation. His money is backed by real property. So when you guys start evaluating Cardone Capital online, and by the way, I appreciate when you do this. I love all the haters out there that want to tell me how Cardone Capital, Grant Cardone, is taking advantage of people at Cardone Capital. One other thing I want to cover real quickly if you have questions. This is the fees that we charge. The fees we charge is this: 1 point in, 1 point out, and 1 point to manage. Okay, so when I buy a $80 million deal, I get $80,000 to buy it. I get 80, let's say we sell it for $100 million, I get $100,000 to sell it. I think that's 1%. What's 1% of 1% times $100 million? Equals, oh, $1 million. Sorry, I get paid 800 grand to buy it. I get paid 1 million to sell it, and I get paid 1 million on the equity to manage it. Okay, and you're like, whoa, man, you're making a lot of money on an $80 million deal. If there's 1,000 investors, okay, just divide it into the people. Okay. By the way, if nobody comes into the deal, I own the deal by myself, and I'm fine with it. I charge nobody anything. I don't charge myself. I decided not to. I was thinking about it. Should I charge myself? No. I could though. Okay. So 800 grand divided by 1,000. Let's say 1,000 people invest with me in this next deal. Divided by 1,000 people. Oh, every person gets charged $800 a year. Now, even Fernando would say that's fair. Francisco would say, dude, that's more than fair. That means you're paying $70 a month for me to find the deal, buy the deal, manage the deal, handle the tenants, the termites, the contracts, the leases, the debt, negotiate the deal. How would you guys like to have me negotiate a real estate deal for you and only charge you $70 a month? Sounds like a pretty sweet deal to me. Okay, let's talk to our callers. 305-865-8668, 305-865-8668. REITs versus Cardone Capital. If you have a question about the fees or how we run the deal, please ask. Let's go. Let's talk. Ben, do you have a deal or do you have a question, my friend?
I got a question and a deal. I'll tell you the question first, yeah?
Make sure he gets a T-shirt too, okay? Make sure one of my James Bowden T-shirts, all right? I apologize in advance. Go ahead, brother. What's up?
Yeah, so my question is, I'm a business owner, and I want to know when I start looking into investing money into real estate, what's the time commitment going to look like?
Yeah, so look, one of the reasons we opened Cardone Capital up is because so many business owners were working with us at our boot camp or working with us at the 10X Growth Conference or Cardone Ventures, and we're partnering with people like, dude, I just don't have time to find the deals. Is that the trouble you're having?
Well, I would want to take this business, sell it, and then open up a real estate business, start doing that full-time. So what's the commitment to do that, like part-time and shift over slowly? Or is it like an all or nothing, just sell the business, then start a real estate business?
I mean, I wouldn't, look, I always say, look, best investments is me, my business, whatever your business is now, and then the third thing would be the real estate, unless you're going to make the real estate your business. But you still want to invest in you first, right? So I got to be in good condition. Two, it's got to be your business. Now, I don't know what the upside of your business is, but I can tell you right now, I have 7 businesses here. Okay, 6 of the if God came to me and said, "Son, you can only have one business," all right, and He says, God says, "Grant, I want you to be a billionaire, but you can only have one business." I'd get rid of the other 6, and I'd keep my real estate business.
That's what I want. That's what I want to do too.
Yeah, and it's not the only way, right? Elon Musk would not do that. Jeff Bezos would be like, no, I'm not going to get rid of Amazon to get a real estate company.
Oh yeah.
But he will be forced to buy real estate in order to continue to grow Amazon. Look, if you're going to grow something, sooner or later you're buying real estate. You can't get big and not own real estate. You have to buy real estate. If you want to be a railroad, just go back to the 1800s. Guys like, I'm going to put railroads all over the country. You're going to be in the real estate business. McDonald's, you want to be a McDonald's franchise guy? You need real estate. So Apple Computer has to buy real estate. If you're going to get big, sooner or later you're going to get in the real estate business one way or the other. Okay, hope that helps, man.
For sure.
You're the man, dude. Make sure you get your T-shirt, okay? Next caller.
All right, we got Sam in San Francisco.
We're talking about real estate versus real estate investment trust. Okay? Real property. Now, most of the Google searches you do online are going to defend the REITs. Why? Versus a private guy like me. Because they're funding these articles all over the internet. Okay, next caller.
You got Sam in San Francisco.
Sam, what's going on in San Fran?
Oh, good, my friend. How you doing over there in sunny Florida?
Good, brother. I'm doing good today, man. You know, we're doing good. We keep our streets clean, unlike San Francisco.
I'm jealous, man. I'm jealous. I got a quick question for you, man.
Please.
When you pick a brand new market to go into, what are those key metrics that you look for? I know you talk about job growth. I know you talk about migration charts and things like that. But what are those musts, man? What are those big boxes that you check off to know you're comfortable 3 years, 5 years, 10 years down the road?
Good. Jobs today. So we're looking for jobs today, jobs tomorrow, okay? And we're looking for affordability. So immediately, if you look at San Francisco, oh yeah, they got jobs today. Oh, they probably got jobs tomorrow, but they're unaffordable, dude. It's not affordable to live there, okay? Sooner or later, the Facebooks of the world will start moving out. They will gravitate away from these places where rents are $9,800. They will have to. Again, if you get big, you need what? Employees. And what do employees have to have? Places to live that are affordable. Yeah. And so, yeah, you see them going down to L.A. They go buy stuff in L.A. But watch, Toyota moves away from Long Beach, California, all the way to the middle of the country in Dallas, Texas, and give up the sun, the 70 degrees, and the high taxes. And why?
Yeah,
because even though Toyota doesn't pay any taxes, their people have to, okay? And when you bang the employees, the cost of living at home goes up. One of the biggest costs, I have 150 employees here. The biggest cost here to everybody, the biggest concern, Johnny, what's your biggest concern? My rent. Dude, his rent's his biggest concern. So every once in a while, I started looking for, hey, we could move to Orlando, man. We could move to Vegas. It would cut people's rent in half. Johnny could get double, but no ocean. Oh. No blue skies, dog. Vegas, man, Vegas. And your skin gets dry in Vegas, too. So, yeah, dude, jobs today, jobs tomorrow, and it's got to be affordable. Then once you have that market, could be Mobile, Alabama. Okay, I'm just giving you a little hint. Daphne, Alabama. I'd be looking right now. Jobs today, jobs tomorrow, and affordable. Okay, it's not Miami, it's not San Francisco, it's not LA, but not everybody can live in Miami. Not everybody wants to live in Miami either. You got some people that live in Miami shouldn't be here. Can't swim. Okay, next caller.
All right, we got Francisco in Chicago.
See, in California, if you have a half an inch of rain, people can't drive cars. Nobody goes to work. They're like, I can't drive out here. It's misting, okay? In Miami, people don't come to work because they can't drive a boat. Half an inch, you need a boat. Y'all remember it rained here last week? I'm like, hey, I need a boat. I got to get me a... Okay, next caller.
All right, you got Francisco in Chicago.
Francisco, finally, man. I've been talking to Fernando all day. Finally been waiting to talk to my man, Francisco.
Yo, my man, Grant, how you doing, brother?
Do you have a deal or do you have a question? By the way, what size T-shirt you wear?
I wear extra large.
Oh, let's get him an XL, man. Okay. What's up?
My man. So, yeah, I got a question for you, Grant.
Okay, hit it.
All right, so I went into the real estate business about 5 months ago, quit my job, and started selling real estate. I've been tampering with residential real estate, and I came across a lead that, I've known the guy for years, didn't know what kind of real estate portfolio he had, and he's looking for big deals.
Yeah.
Now, this is new to me, and I want to learn how to service this lead and going for that one-shot kill so I don't, lose this chance.
Yeah. Well, number one, dude, there's no such thing as a one-shot kill. You're going to die.
Okay.
You need to fill up your pipeline. Okay, I get phone calls every day from people that have never sold the kind of assets I'm looking for, and they're like, "Oh, I found something." Yeah, but you got to know what. I had a guy call me last week. He's like, "I got a great deal for you. It's a 9 cap." Okay, well, number one, you need to know the language.
Okay.
Yeah, okay, bro. 9 cap, huh? You got a 9 cap? Yeah, man, it's in St. Lucie. He don't even know where St. Lucie is. He doesn't know what a 9 cap is, and he doesn't know that I want multifamily, not retail. It ended up being a retail deal. So his one shot got blown because he doesn't even know what he's talking about. What's that dude's name, by the way? I hope he hears this. You offered me a 9 cap. I'm not buying 9 caps, man. I'm buying 5s and 6s because I want great markets, okay? I'm buying only multifamily, and as soon as I found it was retail, I'll never take another email from him because he wasted my time. So, what you should do, if you want to be paid part of that deal or any part of that deal, you should hook him up with somebody in the space that actually knows what they're doing and settle for a tiny, tiny, tiny referral fee rather than nothing, because you're going to end up with nothing. If you're dealing with a big cat buying big deals, you need to know what you're talking about. Just because you can sell a house does not mean you can sell an $80 million deal. All right? Hope that helps.
Without a doubt, and that makes a lot of sense.
Yeah. So look, like a guy like me, where do you live?
I live in Chicago.
Yeah, you live in Chicago. So if you call me from Chicago and say, I got a deal for you in Florida, I'm like, no, you don't. You got nothing, son. Now, if you say, hey, I got a deal in Chicago, that's different. Then you got to know where it is, how many units. Don't tell me that, hey, I need you to sign an NDA, a non-disclosure agreement, before I tell you the information about the deal. I'm not going to believe you, man. You're a scavenger. So what you would do, you know what I mean, a scavenger, like you're a bird trying to peck after something that's already a carcass. I ain't a carcass, man. Okay? So what you'd want to know is this. Hey, Mr. Cardone, I know you're buying stuff, okay? I got a deal. I don't have control of this deal. Just tell me the whole deal. Dude, I just want a tiny, tiny piece. I had a guy that asked me for 6%. He's like, I want 6%. The deal was $90 million. He's like, I want a 6% finder's fee and the seller pays me. I'm sorry, the buyer pays me. I'm like, dude, are you stupid? Right? Like, what's the biggest deal you've ever sold? How much over 80 grand? Because you're talking like a residential real estate person, which doesn't get 6%. They get half, maybe three of that, and you split it with your office. You're not going to get 6 points on a $90 million deal. You might get a half a point, and you're more likely to not even get that because you don't control that deal. So I'm buying $240 million worth of real estate this week. The commissions going out on those 2 deals will be less than $1 million. Less than 5%. Probably be 40 bips of 1%. They're massive deals, man. Why is a guy paying $240 going to pay you the same commission as somebody? You understand? So make sure you're communicating to market. Okay. Today's show, the REIT versus Cardone Capital. And it doesn't have to be Cardone Capital. It could be any. Cardone Capital is considered a private fund, okay? Cardone Capital. I'm a private fund, a private guy investing in real property, okay? The advantages and disadvantages. The number one advantage here is you're liquid. If you consider that an advantage, I don't actually. I don't want liquidity, right? More than this. I don't value cash at all. My whole life changed when I quit valuing liquidity. I don't want to be liquid. I actually want to be illiquid. I don't want to be able to get my money. Okay, for those of you who have a lot of empathy and you got friends and a lot of family that ask you for stuff, and you're the leader in your neighborhood, you're a good dude, right? See, Francisco's a good dude. Somebody ask him for help? Oh yeah, sure, I'll help you. I'm a good dude. People ask me for help? I'd like to. I got a belt. I got a 10X belt I can give you. I don't have any money though, dude. All my money's in real estate. See, so Like when people ask me for help, I can help you. I can help you out of my cash flow next month from my real estate. If there's some cash flow, I'll give it to the church. That's how I pay for all my charities. My charities are funded out of the cash flow from my passive income, okay? Unless it benefits my taxes from my earned income, okay? So number one, liquid. Now, is a benefit to the REIT? It's a benefit to me over here because I don't want to be liquid. I want to be illiquid. Okay, I think cash goes down in value. I think cash goes down in value, and assets go up in value. Okay, now let me just back that up. Why does the REIT want you to be liquid when they aren't?
Take the money out and get penalized.
Do you understand? The REIT takes your cash and buys assets that aren't liquid, and allow more people to come in. How do they pay Natalie off? Natalie comes in today and wants her money back tomorrow. How do they pay Natalie off? Because you're buying shares from Johnny or Francisco or Grant. And they take that money and you're basically trading in the marketplace of people that need liquidity. The REIT does not need liquidity. They create a liquid pool of traders. Okay, I want to be invested in the real estate. Okay, so liquid. You're backed by paper here, and your paper. And again, like if the only way you're going to be invested in real estate is through a REIT, do it. Get invested, and never trade your shares. Okay, particularly when the stock market goes down, and it will. Don't trade your shares then. Okay, the REIT is backed by paper. Okay, I am backed by property. So you got to decide which one of those you want. These guys pay every quarter. I pay every month. These guys are massive, $29 billion. I'm $1 billion. I'll get to 29. Right? I got a phone call today at 2 o'clock today from a group that has 20,000 units just in Southeast U.S. They called me last week and said, we'd like to have a phone call with you. Why do you think they're calling me?
They trust you.
No. Why do you think? What do you think they want with me?
They want to buy your deals.
They might want to buy all of them at one time. Okay. So what we're going to do at Cardone Capital, remember, I'm at $1 billion today. They're $29 billion. The two examples I gave you. My goal is to get somewhere in between here, maybe 10, 15 billion. How can these guys go from 29 billion to 50 billion? One deal at a time? Or why don't we just buy that whole deal? They got the money. They got the marketplace. They got people trusting them. Come on, give us money. They got a liquid pool of people, millions of people. I'll show you how many investors they have. Okay. I got 2,500 investors. They have 370 million shares just at Equity Residential. So look, that gives you a little look at my little viewpoint of the REIT versus Cardone Capital. I'd love your comments. Where am I wrong? Where am I missing it? Look, I'm totally open to seeing another way of doing things. I'm still figuring everything out myself. I've done pretty good, but I don't know everything. I never pretend to know everything, and that's why I keep learning new things. So if there's something I'm missing here, or if you want to interview me, that would be even better. REITs versus Cardone Capital. Okay, Bitcoin versus real estate. Maybe you want to do that one. I'm in both of them. Most of the people that are going to interview me are only in one of them, if either one of them. Just saying. And by the way, I am biased. Trust me, I am super biased. So I understand today in this show, I am extremely biased. Best comment, as long as I got these t-shirts, I'll give them away. Okay, so you guys comment below. We'll send you out a t-shirt. Won't make you any money, but it's a t-shirt. Thanks for watching today.